Well, Kate Rooney is out on the West Coast and has another guest to interview. Kate, the floor is yours.
Hey, Tyler, from technology strategy to planning through a finance lens. I'm Kate Rooney, and here with me now is Visa Vice Chairman and Chief Financial Officer Vasant Prabhu. Vasant, thank you so much for being here.
Hello,
so
Kate.
In this session, we want to take you through investing. Good to see you. Thanks for being here. We want to talk about investing for the future, and I want to get your take on the new normal for the workforce, but more from a finance angle. So let's start with March and your response to the shutdowns. It now seems like years ago, but San Francisco began closing down. Visa headquarters, which are right near our offices, also ended up shutting down pretty soon after. Walk us through what you did to stabilize the company. I'm curious to see if a global pandemic was in your playbook as CFO.
Well, obviously, we had, like a lot of other companies, not anticipated a pandemic of this magnitude. But we managed within a space of 24 hours to move 97% of our people working remotely. And as you know, we run a very large, complex network. And one of the first things we had to do was ensure that our network worked, that it was reliable, that we had no issues whatsoever, that we moved money every day. We moved trillions or billions of dollars every day, and it worked flawlessly. We ensured that all our employees had the tools they required to get the job done. Financially speaking, we had to make sure that we had the liquidity we needed, that we had the financial platform on which to make sure that our company had no issues. And all that was done very quickly. And then we got down to ensuring that this mode of working remotely did not affect our productivity, that employee well-being was handled in many different ways. We managed a very high-touch environment all the way through. We have given people quite a bit of flexibility on when they work, of course, where they work. We have well-being hours on Fridays for people to catch up with the rest of their lives for the afternoon on Fridays. We've doubled, the number of days that we pay for childcare. Our CEO, Al Kelly, committed that we would have no layoffs through the year 2020. And fundamentally, the company has performed extraordinarily well. All our surveys say morale is high, our productivity is the same or higher. And we've learned a lot. In fact, we have a group working on reimagining how we work. So we take some of what we've learned and apply it permanently for the future.
And Vasant, I want to ask you, you mentioned the financial perspective, things like liquidity. How did you calculate some of the unknowns here and the uncertainty around the pandemic?
Well, we wanted to ensure at the very outset that we had plenty of cash available. We moved our cash to safer investments. For high-grade credits like ours, there was a market open even through some of the difficult few weeks post the pandemic. We were able to issue debt at very low rates at that time. That was just a precautionary measure. We have a very solid balance sheet. We have a very high rating. And once we've done that, we moved on the offensive. This pandemic has opened up a lot of opportunities. There has been a secular shift that has accelerated, that has been underway for a while, but it accelerated to the pandemic. The move to e-commerce, more adoption of digital forms of payment, a massive expansion in government interest in upgrading their e-commerce infrastructures, a significant increase in a variety of use cases, which we call moving money, that go well beyond payments, person-to-person payments, disbursements, payments by insurance companies, on-demand payroll to gig economy workers, to delivery workers, etc. Those have been huge. There's been huge demand for all that. Ensuring that we can serve the demand has been a critical priority. So we moved to offense because this crisis requires us to do a lot of things to enable economies to work, to enable people to move money, to enable people to get paid, to enable merchants to do business. Frankly, without the infrastructures we had, a lot of the global economy could have ground to a halt. And in fact, countries that had good digital payments infrastructures enabled by people like us did far better than countries that did not.
I want to ask you about some of those macro trends. That's helped Visa offset some of the losses. You mentioned e-commerce, a rise in mobile payments, and the economy essentially going digital. How are you thinking about automation and Visa going digital as a priority internally? Has this changed the way you think about investing in digital?
Well, there's no question whatsoever that what this has done is further clarified where the huge changes are in our business, which we've been investing in for the past 5 years. There's about 18 trillion in cash and check around the world that consumers use to make payments for things they buy. That has accelerated through the pandemic, as you can imagine, when in-person shopping was not possible. That has led to a significant increase in e-commerce. In fact, our e-commerce business is growing twice as fast now as it did before the pandemic. And that is happening globally. It's happening in many segments like food and drug and restaurants, etc., that often didn't have high levels of e-commerce penetration. Every merchant has had to get better at e-commerce. Governments have become far more focused on enabling e-commerce and so on. The second big change, of course, is even as economies opened up, cash is dirty. People don't want to handle cash, understandably. And we have taken a lot of friction out of digitizing payments with contactless payments, tap to pay as we call it. And there's been a huge adoption of tap to pay around the world. You go beyond that, we have a moving money business that enables a whole range of use cases called Visa Direct. These include person-to-person payments. Of course, when you can't meet people, person-to-person payments done digitally become extremely important. Venmo and Zelle, Square Cash, and so on. That's happening around the world. Disbursements, where people need money fast, whether it's on-demand payroll, gig economy workers, delivery workers, others who want payroll, on demand in these tough times. Distributing money to people from governments. We've enabled that in many parts of the world. We've seen substantial growth in moving money. And those are all priorities we had. There's 185 trillion in the business of moving money. It's a whole range of use cases that historically we did not serve, but for the past 5 years we have been. And in fact, that's been a major area of focus. It's accelerating through this pandemic. Our Visa Direct business has grown over 70%. It's almost as if the pandemic wasn't happening. And had it not been for Visa Direct, a whole range of things that consumers desperately need right now, remittance payments that are global, a whole range of other payments that cannot be made in person are enabled by Visa Direct. So our investment posture has stayed very much the same. And if anything, we've accentuated our investments in all these new use cases, especially around moving money.
It's been interesting to see that shift from cash to digital. I want to talk about some of your neighboring tech companies out here in San Francisco. They have really been leaning into remote work. Some of them, I think of Facebook, for example, are trying to go majority or at least half remote in the next decade. I'd be interested to see how this pandemic has changed your perspective on remote work. Are you more open to it within your own team? And are you looking to hire more of a remote workforce? And then are there things or certain barriers to taking a finance role remote versus other tech roles?
Well, there is no question whatsoever that this has taught us that remote work works. We've been monitoring productivity in a variety of functions, including finance, technology, elsewhere. The general view we have is productivity has, if anything, gone up, not down. We've been monitoring how people feel about this. In general, the vast majority of our people believe that remote work works. We've been monitoring well-being of employees. People enjoy having the flexibility of when they work and where they work. So we've come around to the view quite significantly in the past few months that fundamentally changing how we think about work is vital. And we're going to do that. There will be, right now, of course, 97% of our people are working remotely. There's only a few essential people in the offices right now. We are quite sure that when we come back, we will have 3 classes of employees, and it'll be defined by role. And it won't be that different by function. Certainly, there'll be a small group of people that will have to be in the offices because their jobs require a physical presence. That'll be a very limited number. Security, for example, certain kinds of tasks that can only be done on site. There'll be another group of people that will also be not very large, that can work remotely all the time, permanently remotely, again, defined by role. But the vast majority of our people will have flexibility. They will have the flexibility to work at home, and also the requirement that they come into the office for certain kinds of tasks at certain points in time. There are certain things you can't do well remotely, certain kinds of activities that need an intense amount of collaboration, the importance of onboarding new employees, building a culture requires certain events from time to time. Those kinds of things, we will require employees to come in. But by and large, employees will be able to work, our associates can work remotely. They will be able to work with some flexible work hours. And there'll be some prescribed kinds of things that we use to build a culture, to build relationships, for client reasons, etc. So this is a fundamental change. The world's going to be very different. And it applies to finance as much as it applies to any other function.
Different indeed. Vasant, thank you so much for being here. We really appreciate your time.